Welcome to the deep dive. Today we're looking at quite an interesting situation with Nutex Health, that's NASDAQ, NUTX. They've posted some really eye-popping numbers recently, but, well, the market valuation, it tells a more complicated story, doesn't it? Our goal today is really to unpack that disconnect, try and understand what's actually happening, beneath the surface there.
Yeah, it's a fascinating case. They position themselves as innovators, blending emergency care with population health management. It's a hybrid model.
A hybrid model, right. And it seems like Wall Street is still trying to get its head around how to value that approach properly.
Exactly.
So our mission really is to dig into why this valuation might be, let's say, misunderstood, especially after they announce such a significant profit. We want to uncover the real story behind their next moves.
Makes sense.
So get ready. We'll examine those blockbuster Q1 2025 earnings, try to understand the complexities of the valuation, look at the operational changes happening, and then sort of grasp its dual growth engine. Let's get into it. Right, let's start with those Q1 numbers because, wow, they certainly jump off the page. Nutex Health posted a net income of $60.2 million.
Yeah, $60.2 million.
Which is, what, a 1,000% year-over-year increase? That's staggering. But the immediate question is, okay, what drove that?
No, and that's the key, isn't it? What's really interesting here is the source. It wasn't just core operations ramping up by 1,000%. This surge was largely down to a $105.4 million arbitration windfall.
Ah, okay. Arbitration.
Yeah, and this revenue, it came from out-of-network claims they'd previously written off from 2022 and 2023.
Right.
They managed to recover them through favorable dispute resolution, under the Federal No Surprises Act.
Right, the No Surprises Act. That's been a whole complex area for providers.
Absolutely. It's designed to protect patients from surprise bills, but it also created these intricate pathways for providers to reclaim payments. And Nutex clearly figured out how to navigate that process very effectively.
So they mastered the system, in a way.
It seems so. But, and this is crucial, it's important to understand, this was a non-recurring event.
Okay, a one-off.
Exactly. Management's been quite clear. They haven't projected similar revenue into their regular forecasts going forward. But think about what this tells us, even if it's non-recurring. This aggressive pursuit of old claims. It suggests Nutex isn't just passive, right?
Mm-hmm.
They've built the internal capability, the muscle, to navigate this incredibly complex reimbursement landscape and actually extract significant value.
That capability itself could be a hidden asset, you're saying?
Potentially, yeah. And they are apparently pursuing another, $160 million in similar claims.
Wow.
Though, success and timing on those, definitely not guaranteed. But the fact they're going after it is notable.
Okay, so with those really remarkable Q1 numbers driven by this windfall, you'd think the valuation might reflect that huge profit jump more clearly. But it sounds like it's actually become a bit of a puzzle.
It really has.
Why is Wall Street seemingly struggling with how to price this in? Even if it's a one-time thing, it's still a huge cash injection, right?
It is. And that's where you see the valuation metrics getting tricky. Right, we're seeing these forward PE ratio estimates, somewhere between 15x and 17x based on analyst consensus.
Yeah, around there.
Yeah.
Though I've seen some media sources mention numbers even higher, like maybe 25x.
Okay, 15 to 17x, maybe higher. For a small cap healthcare company, that multiple, it feels elevated, doesn't it?
It does. Typically a multiple like that signals the market expense either really significant future growth or
it's pricing in a lot of uncertainty.
Exactly.
Right.
And that's what we need to kind of unpack here. Which one is it? Or is it a bit of both?
So this raises a really important question for anyone looking at this, for investors. Why might this valuation, even though it's high for the sector, maybe not be entirely irrational, given they did return to profitability?
Right. The core question isn't just, is the multiple too high? It's more nuanced. It's, okay, will earnings normalize higher now that some of these arbitration issues are resolved, at least partially, and they seem to be rebuilding that core performance? The market right now, it feels like it's pricing in that uncertainty quite heavily, rather than maybe focusing on the potential upside if things go right. That's crucial to remember when you look at that PE.
Okay, so the arbitration win is definitely the headline grabber. Huge number.
Yeah.
But looking past that, are there other signs? Are we seeing any sustainable operational shifts, things that suggest this isn't just a one-time blip?
Yeah, that's the critical follow-up question. Absolutely. If you dig a bit deeper, past the arbitration noise, there are some signs, yes.
Like what?
Well, for instance, their operating expenses, they actually decreased 25% year over year. That's significant.
25% reduction in OpEx, okay.
Yeah. And adjusted EBITDA, which people often look at as a cleaner measure of core operational profitability, they actually turned positive, $71.4 million.
Positive EBITDA, great.
Yeah.
But heavily influenced by the arbitration money, you'd assume.
Oh, absolutely. We have to acknowledge that. You can't look at that $71 million figure in isolation. The arbitration revenue massively boosted it.
Right.
Also, they raised $25 million in equity recently. That helped shore up liquidity, and they did it with what seems like minimal dilution, which is also a positive sign of managing their capital structure.
Okay.
So, look, these aren't just, cosmetic metrics they're putting out there. They do seem to reflect a company that's actively trying to transition, moving away from that post-SPAC volatility.
Right, that turbulent period after going public that way.
Exactly. Moving towards becoming, hopefully, a leaner, more accountable operator. But, and this is a big but.
There's always a but.
There is here, must be stated very plainly, ongoing profitability without that arbitration income. That remains unproven.
So the core model sustainability is still the question mark.
Precisely. The next few quarters, they're going to be absolutely essential. We need to see if Nutex's micro-hospital model can actually sustain positive margins without these sort of legal tailwinds pushing them along. That's where the rubber really meets the road.
Okay, so we've talked about the immediate win, the arbitration cash. We've talked about the operational tightening, the cost savings, the positive EBITDA, albeit with caveats. Looking forward now, how does this all fit into their long-term vision? Is it just about running these micro-hospitals better, or is there a bigger strategic play?
That's exactly the right question to ask next. Because to understand their potential future, you really have to look beyond just the emergency rooms, the micro-hospitals. You need to recognize this unique dual growth engine they're trying to build.
Dual growth engine.
Yeah, they operate this two-tiered business model.
Yeah.
You've got the micro-hospital operations on one side, and then paired with that is this growing population health management segment,
Yeah.
PHM.
PHM, right.
Yeah.
Population health management. How does that work?
Well, the strategy, as they lay it out, is for the PHM side to drive patient volume. They're doing this through partnerships with independent physician associations, IPAs.
Okay, so leveraging existing networks rather than building everything from scratch?
Seems to be the plan, yeah. Which is potentially a smarter capital move, less risky than just building tons of new infrastructure themselves. And at the same time, that PHM segment is being structured or restructured to generate recurring revenue streams.
Recurring revenue, okay. Through what?
Through things like value-based care arrangements, wellness programs, primary care alignment, basically managing the health of a population proactively, not just treating emergencies.
So keeping people healthier and feeding the hospitals when needed.
That seems to be the idea. Look, it's still an early-stage integration strategy, you have to say that, but it definitely offers significant long-term potential if they can execute it well. And crucially, with capital discipline.
Right, execution is key.
Always. But the ambition here is quite large, really. It's genuinely trying to reshape how acute care, like the emergency stuff, and preventative health services work together, profitably, with PHM designed to sort of feed patients into their micro-hospital network, and maybe even vice versa to some extent.
Interesting, so it's a more holistic approach they're aiming for.
That's the vision, yes.
Okay, so let's talk about the setup here. The setup that maybe, as you suggested, few are watching closely enough. With a market cap under $700 million, Nutex is probably still flying under the radar for a lot of big institutional investors, right?
Absolutely.
Yeah.
It's often below the threshold for many larger fund screens. But that could potentially change, maybe quite soon.
And a key moment is coming up, isn't it? Their next earnings announcement.
Yeah, that's going to be critical. Expected sometime between, August 8th and August 11th, 2025.
Right around then. And that report, it feels like it will be a major test. Can they show sustained operational gains without those big arbitration boosts? That's the million-dollar question, or maybe the $60 million question here.
Exactly. It could be a real turning point one way or the other.
So going back to that PE multiple we talked about, that 15x to 17x range,
Yeah.
how should we, or how should you, the listener, reinterpret that now? Maybe not just as a warning sign.
Well, perhaps you could view it less as a flashing red light and more as maybe a signpost of cautious optimism. Does that make sense?
Cautious optimism.
Okay. It indicates the market is pricing in that uncertainty we discussed. No doubt about it. But it might also be overlooking some of the future upside. Upside that could come if they start delivering what you might call clean quarters.
Clean quarters, meaning?
Quarters without these huge one-time arbitration wins skewing the numbers. Quarters that show the underlying micro-hospital and PHM model is actually working sustainably.
Got it. Proof of the core concept.
Exactly. If they can deliver that, the perception could shift quite rapidly.
So wrapping this part up,
Hmm.
for you, the listener, if you happen to be an investor looking for a potential healthcare turnaround story, Nutex Health might just be one of those overlooked gems hiding in plain sight. You've got
Okay.
tangible revenue, you've got clear upcoming catalysts like the earnings report, and you've got potential upside if they execute.
It's
Yeah.
definitely one to watch, I'd say. So just to recap our deep dive here, Nutex Health, it's this hybrid player, right? Fast evolving platform, big ambitions to reshape how acute care and preventative health work together. And that $105 million arbitration win, while it was non-recurring, it bought them crucial time and, importantly, capital. Capital to try and prove that their core model really works.
Right. So here's a final provocative thought for you, the listener, to maybe mull over. If Nutex's core business model, the non-arbitration part, does prove sustainable in these upcoming quarters, how might that challenge some of the conventional ideas about investing in healthcare?
Good question.
And maybe think about this too. When you're evaluating companies in other disruptive sectors, not just healthcare, what kind of foundational operational changes, like those potential clean quarters we talked about, might you look for as proof that the disruption is actually turning into a sustainable business?
Yeah. What are those core indicators beyond the initial hype?
Exactly. Just some food for thought as you go about your day.